Heya Cryptozens, tonight's show. Senator targets crypto scams, unstoppable unicorn spotted, and Zipmex files for bankruptcy protection. It's 10 p.m. Pacific time. The date is July 28th, 2022, and welcome back to the Crypto Overnighter. My name is Nicodemus, and I will be your host. The cover model, mascot, co-host for this podcast is Tex. And together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. Take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night so that when you leave in the morning, you're taking with you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. Sherrod Brown is a Democratic senator from the state of Ohio. He is also the chairman of the Senate Banking Committee, specifically the Senate Committee on Banking, Housing, and Urban Affairs. So it was in that context that he made comments at a hearing. It was called Protecting Investors and Savers, Understanding Scams and Risks in Crypto and Securities Markets. He said, quote, Bitcoin can be used for old-time schemes and frauds like Ponzi schemes and bogus investments, promising big returns with only upside and no risk. New ways to cheat people out of their money is not the kind of innovation most people want in our economy. And it was during that hearing that he was expressing his concern that investors were getting hurt. When lending platforms like Celsius and Voyager are offering substantial yields on deposit, when those fell apart, people got hurt. He said, quote, in the last 2 months, we've witnessed spectacular blow-ups in the crypto markets, exposing both alarming interconnectedness and the enormous risks among crypto firms. Consumers and investors were misled with promises that their crypto would earn double-digit interests in perpetuity. And he was not done there. He said the committee would push government regulators to, quote, do more. He's looking to the Securities and Exchange Commission and the banking regulators to do more to protect the public as cryptocurrency investments become more commonplace. He's not willing to leave it to industry, and I don't think he's going to be in favor of a self-regulatory organization, which would be something outside of the government that has that same power to create and enforce professional regulations on its own industry. He said, quote, industry shouldn't be allowed to write the rules they want to play by. Now, speaking of Senator Brown, he also sent letters to the chief executives of Google and Apple. He wants them to respond to fake crypto investing scam apps floating around in their app stores. Just this month, the FBI reported that scam crypto apps have stolen over $42 million from investors in less than a year. Now, these are more straight-up scams. They're apps with fake logos and fake brands. They're made to look like an offering from a legit firm. And then they take those fake apps and their stolen reputation of that legit company. That's how they lure victims into handing over their cash. He argued it's on both the crypto industry and the app stores. He said both the industry and the app stores bear the responsibility of steering potential victims away from scams like this. He said, quote, it is likewise imperative that app stores have the proper safeguards in place to prevent against fraudulent mobile application activity. Now, what he wants from Apple and Google is a detailed outline of what they're doing to protect investors, the step-by-step by which an app is approved from their app stores. Also, what's involved in reporting scam apps and how they monitor apps for fraudulent activity. Now, he wasn't the only member of the Senate Banking Committee to make their opinion known. Senator Pat Toomey, well known to be crypto-friendly. He wasn't happy with the fact that the SEC didn't even show up for this meeting. Given how many bankruptcies there have been lately, from the big players, it seems weird, right? Because as Senator Toomey was saying, the lack of Chair Gensler at the meeting probably didn't sit well with people who lost money. He said it was, quote, little comfort to the thousands of Americans who lent their crypto to Celsius and Voyager. What was the SEC doing while these companies and others were offering lending products that looked an awful lot like securities? Now, he thinks, and I would have to agree, that more clarity on a regulatory level could have prevented damage to the investors. And he is also not a fan of regulating by enforcement. He's a legislator. That makes sense. He said, quote, "It is clear some Americans invested in unsustainable schemes and even fraud. It creates a legal gray area that allows entities with a higher tolerance for legal risk to offer products that might be bad for consumers." At the time of writing, the global crypto market cap is $1.09 trillion. It's up 3.66% in 24. The top 5 cryptos by market cap are Bitcoin up 4.06%, Ethereum up 5.23%, Tether, USDC, and Binance Coin up 2.69%. Now, this is kind of sad news. We were talking about Zipmex the other day. Zipmex is a Thailand-based exchange, and they're filing for bankruptcy under Section 64 of Singapore's Insolvency, Restructuring, and Dissolution Act 2018 on behalf of their company. This would protect them from creditors in the form of their party actions and claims. It would give them 6 months to get their affairs in order. As Zipmex said, quote, "The moratoriums would give the Zipmex Group the breathing space and time it requires to explore options to resolve the liquidity situation, including to pursue the recovery against Babel Finance, and to formulate a restructuring plan and secure additional investment to secure the Zipmex Group's operations moving forward." Now, remember, they had some issues because of bad debt. And so it came to pass that Zipmex's financial troubles and the, quote, "volatile market conditions" caused Zipmex to freeze withdrawals. That's right, the 20th of July, Zipmex put out a tweet saying, quote, "Due to a combination of circumstances beyond our control, including volatile market conditions and the resulting financial difficulties of our key business partners, to maintain the integrity of our platform, we would be pausing withdrawals until further notice." And that's usually the beginning of the end, especially this market cycle. It goes pause transfers and withdrawals, then public outrage, then apologies and promises, then bankruptcy. So it was with great interest that I watched Zipmex seemingly defy the odds, or so I thought. Well, they turned around, and 2 later, they resumed withdrawals, at least from the trade wallets, which was kind of a head fake. At issue are the Z wallets. They're the main wallets where users store their funds. Those remain frozen. That is despite a definite deadline of today. That's right, they are due to release the funds today to unfreeze people's accounts and enable regular trading. That's on orders from Thailand's SEC. Now, when we talked about this the other night, we talked about that Zipmex was down $53 million due to outstanding loans. They loaned out $5 million of that to Celsius, and they're writing $5 million off. The rest of the debt, $43 million worth, belongs to Babel Finance. That's what we were told. Now, Babel Finance was hurt early in this recent onslaught of bankruptcies in the whole Terra Luna 3AC mess. As we covered here on the 18th of June, Babel posted their own notice halting transfers and withdrawals, which apparently has led Zipmex to the position it's in today. Now, prior to all this, Q1 this year, Coinbase made a move. They made an offer to buy Zipmex. That deal fell through on the 9th of June. Marcus Lim is CEO and co-founder of Zipmex. At the time, he said that while Coinbase's potentially interesting partner, quote, "an investor makes more sense at this stage." So who knows? The deal fell through because reasons. Maybe Coinbase saw a $100 million hole they didn't want to plug. For their part, Zipmex says they're in talks. They said they're securing new investments to fix the liquidity problem, and they say they're in advanced stages of those negotiations. The global NFT market is down 11.28%. Sales volume is also down 0.72% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Mutant Apes, followed by Azuki, Otherdeed, CryptoPunks, and Meebits. Now keep in mind, some of these collections have very volatile prices, so do your own research. It's been a while, hasn't it, since we got a new unicorn? With the market the way it's been lately, it's not a big surprise, though. However, the newest member of the unicorn herd is Unstoppable Domains. They reached their unicorn status with a $1 billion valuation on a $65 million Series A funding round. That round was led by Pantera Capital, Mayfield, CoinGecko, Polygon, OKG, and others. Previous investors, Boost VC and Draper Associates, returned to take part in another round. Previous rounds, including a Series A in 2019, have raised $6.9 million. So this is quite a jump, actually. And look at that ratio. $1 billion valuation on a $65 million funding. So Unstoppable Domains isn't new. They were born in the crypto winter of 2018. That's right. They were founded in 2018 and slogged through the crypto winter of 2018 and 2019 to reach where they are today. Now, to be open and honest, I have a few of their products. My name, podcast, stuff like that. Those products I mention are domain names, specifically domain names for websites and crypto wallets. Unstoppable Domains provides those domain names in NFT format, so they're easily tradable. Have you ever tried to, quote, trade a Web2 domain? It is annoying at best. In this case, it's just an NFT. One smart contract later, and the trade is done. Matthew Gould is founder and CEO at Unstoppable Domains. He said, quote, "When you take on funding, you take on a lot of responsibility. You have one day to celebrate and take the victory lap and have a glass of champagne. And then the next day, you get right back to work." According to him, Unstoppable has registered more than 2.5 million domains so far. These include extensions like .crypto, .blockchain, .wallet, and .dao. For example, my name is Nicodemus.crypto. Now, last year, they partnered up with Circle, so you could also get a .usdc domain. The company has reportedly taken in $80 million so far in registrations. Those registrations start at $5 each and then go up from there. Now, notice on that list of investors, Polygon. That's because Unstoppable Domains are minted on Polygon. Although I have a couple of early Ethereum domains, and now people can mint directly on Polygon for a faster, cheaper, and more energy-efficient solution. And there's no maintenance fees. That's right. Once you own it, which differentiates it from the Ethereum name service, or ENS, which does have a maintenance fee. On the other hand, that makes an Unstoppable domain much more centralized. Now, Gould reportedly doesn't see a big rivalry going on with ENS or Solana's version, the Solana naming service. That's because they're all kind of working towards the same goal: improve crypto accessibility and push digital ownership. Something else to know. Unstoppable Domains said MoonPay has become their partner, starting last month. The plan is to make it so that you can buy an NFT domain easier. So apparently, as part of this, MoonPay payers will be able to send and receive crypto through their domain names. And innovation like that seems to be important to the Unstoppable Domains team. Gould said, quote, "As the digital economy becomes a larger part of our lives, it's time for people to own their identity on the internet. We're thrilled to partner with Pantera and other investors who share our vision of onboarding billions of people onto Web3 through NFT domains that unlock user-owned, private, and portable identities." All right, I think we're going to call it there for tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. You stay safe out there. Watch out for yourselves, but watch out for each other too. We'll see you tomorrow night.